Hello everyone, this is Ask the Experts. When starting a full-fledged business in Japan, it is very important to establish a company in Japan as a base for localization and business development. For establishing the base, you need to proceed in accordance with Japanese laws and regulations. In this video series, experts in the field of incorporation will explain the advantageous information that foreign companies need to know when incorporating in Japan. In this episode, we will be focusing on taxation in Japan. Experts will explain the topics that many foreign companies have questions about when establishing a base in Japan. Let me introduce Ms. Sato. Thank you so much for joining us.
Thank you for having me.
It feels overwhelming thinking about all the things we have to do. Where should we start?
I think the first important matter is scheduling. Each of the procedures just introduced has its own deadline, so it's important to plan ahead accordingly so you do not miss the deadline for submitting your documents. This may sound a lot of work, but if you follow and understand the rules and apply certain procedures, it can often be advantageous for tax purposes. So in this video, I would like to share you the key points you need to know.
My first question is, how are accounting standards between Japan and other countries different?
Well, the bookkeeping system, which is the basis of accounting, is a universal rule. So to some extent, the same rules can be applied to any companies. However, there are some cases where the rules are treated differently. So at the time of setup, the following 2 points should be noted in particular. First of all, if you want to apply the rules of your home country, you may be able to continue by prior notification. There is statutory valuation method stipulated in Japan, such as depreciation method, inventory valuation, or valuation of receivables and payables in foreign currency. However, if you wish to adopt a method that differs from the statutory method, there are other options you can choose. In order to do so, you are required to submit a notification in advance. The second point is to know special tax rules in Japan. Well-known example is director remuneration. Whether director remuneration is recognized as expense for tax varies from country to country. But in Japan, fluctuating portion of director remuneration is not recognized as expenses for tax. There are solutions which can be taken in advance, so again, it is important to be aware of such rules.
Next, we need to think about capital. I hear that this is a common question that has been asked. How should we think about capital from a taxation point of view?
Basically, the smaller the amount of capital, the better it is from a tax standpoint. Firstly, small and medium-sized enterprises with capital amount of 100 million yen or less are eligible for a reduced corporate tax rate. Furthermore, a corporation with capital amount of less than 10 million yen can become a tax-exempt enterprise for consumption tax purposes during its first year of operation. In addition, the per capita tax levy of the corporate inhabitant tax is also determined by the amount of capital and the number of employees. And the minimum amount is set for companies with capital of 10 million yen or less.
Let me just clarify. So the less capital, the less tax burden you will have.
Yes, but there are 2 points to be noted. One is that even if the capital of the subsidiary is set low, if the capital of the parent company is high, the reduced tax rate may not be applied in some cases. Therefore, it's important to check the conditions of the parent company. Specifically, if the parent company that owns 100% of the subsidiary is a large corporation with capital of 500 million yen or more, the reduced tax rate will not apply even if the subsidiary's capital is less than 100 million yen. Therefore, please be careful when the parent company is listed on a stock exchange in your home country or when the parent company increases its capital in the middle of a fiscal year. The second point is thin capitalization taxation. When the company is short of fund and needs financing from parent company, you will either need to increase the capital contribution or get a loan from your parent company. In the case of borrowing, the the interest payment can be treated as an expense for tax purposes, whereas payment of dividend to the capital contribution is not tax-deductible expenses. So taxable income will be lower in case of the loan. Thus, in order to prevent excessive tax avoidance, a rule has been established that interest payments exceeding a certain amount are not deductible as expenses for tax purposes. Specifically, this rule applies to loans exceeding 3 times the amount of capital, but this calculation is very complicated. So companies planning to make large capital investments or companies with small capital that plans to borrow from parent company from the beginning, it will be a good idea to consult with your tax advisor.
I see. So there are multiple tax systems that you need to keep in mind when deciding on capital amount. Speaking of capital, I think we need to refer to how it affects registration.
Yes, apart from tax perspective, too little capital is also not a good idea according to JETRO's advisor. In Japan, capital tends to be seen as a criterion of measuring a company's business scale and credibility. Therefore, it's not recommended to keep the amount extremely small.
I see. So there are multiple factors we need to take into consideration when deciding capital amount.
I agree. I think each company has its own way of deciding the amount of capital. For details, please consult with JETRO and get advice from the experts for the right amount of capital that suits your company the best.
Here's my next question. There are many different types of taxes in Japan. Are there any we should particularly pay attention to?
I would say that would be withholding tax. Normally, the person who earns the income pays the tax, but in the case of withholding tax, the payer deducts income tax first and then pays to the tax office. A typical withholding tax would be on salaries, and in many countries, including Japan, the tax on salary is deducted by the company and paid to the wage earner. The withholding tax I would like to introduce you today is the case applied to overseas payments. For example, withholding tax is required when remitting dividends, interests, or license fees. Before making such payments, it is advisable to check whether withholding tax is applicable. Also, if the country has tax treaties with Japan, you may be able to receive tax reductions by submitting a notification, so you should check this point as well.
Are there cases where someone forgets withholding taxes and gets into trouble?
Yes. For example, there are cases where you remit money without knowing about withholding tax for several years, and later, when you check your past records, you realize that it was subject to withholding tax. You can pay it later, but late payment charge will be added as penalty. If it was pointed out at tax audit, the unpaid withholding tax for several years could be a large amount, and so would the penalty portion. Since the recipient has already received the payment, they may not agree to refund the withholding tax, even if you explain the situation. In such cases, the company may have to pay the withholding tax as well.
Wow, there are such cases like that. Moving on to the next topic, a topic popular among international taxation, transfer pricing taxation. Does transfer pricing taxation apply in Japan?
Yes, it's applicable in Japan too. Transfer pricing taxation is an international rule that states that transactions with the foreign affiliates are calculated as if they were conducted at the same price as a transaction with a third party. For example, when a foreign parent company sells or provides services to a Japanese subsidiary, it cannot charge an extremely low or high price just because it is an affiliate, but must charge the same price as if it were dealing with a third party. Some of the multinational corporations have long been pointed out to reduce their tax burden by manipulating their group companies to make less profit in the countries with higher taxes. Transfer pricing taxation is a rule to prevent this price control, and it is also included in the BEPS project, a program led by OECD, and Japan is also taking part in it.
What do we need to pay attention to in particular here?
For example, parent company owns a right of software and licenses it directly to a Japanese customer without going through a Japanese subsidiary. In that case, it may seem that transfer pricing taxation is not relevant, because the payment is not made directly to the subsidiary. But if the Japanese subsidiary provides some support or contributes to the sales of parent company, the parent company may have to pay a certain fee or compensation to the subsidiary. Such payment amount would be subject to transfer pricing taxation.
I see, so it's important to check the conditions here. Thank you for sharing with us such beneficial information. Could you give us a message for those who are thinking of expanding their businesses in Japan?
As introduced in today's video, it is true that there are many rules and procedures that must be followed in order to start a business in Japan. On the other hand, there are also various efforts to support businesses in Japan. For example, there is a tax credit system for companies that increase jobs in difficult economic situations, a system that allows startup companies that initially have more expenses than sales to carry forward losses to offset with future profits, and a system that allows tax credits and special depreciation for companies with large capital investments. We hope that you will make good use of such treatments. Therefore, we recommend that you seek advice from experts through JETRO for various procedures. We would be happy to advise you on the issues we have discussed today, the latest information, and other points that will help your company receive preferential treatments and manage your business advantageously in Japan.
Thank you very much, Ms. Sato. We hope you all understood the important points of taxation when incorporating in Japan. In addition to this taxation video, there are also videos on company registrations and visa and human resources management. If you'd like, please check out these videos as well. JETRO has more than 70 overseas offices to support foreign companies entering the Japanese market and developing their business. If you are a foreign company considering expanding your business to Japan or establishing a base in Japan, please visit your nearest JETRO office or contact us through the inquiry form provided in the description below. Our experienced staff will be happy to guide you through the process. We wish you success in the Japanese market. See you soon.